Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a little look at some financial results of two of those Canadian locally listed banking giants. We're talking, of course, about CIBC Caribbean as well as Scotiabank Trinidad and Tobago, SBTT. Now, both groups would have reported improved earnings for their fiscal years concluded in October 2024. Let's take a look at what that look like and what investors might expect in the year ahead. Turning firstly to CIBC, where the group reported an earnings per share figure in TT dollar equivalent of $1.15, which represented a 3% increase from the $1.12 recorded in the prior comparable period, that is fiscal 2023. Driving this performance was an increase in total revenues of 4.3% from 4.79 odd billion TT equivalent to just over the $5 billion mark. Operating expenses increased 6.5% from 2.77 billion TT equivalent to just under 2.96 billion TT equivalent. Overall net income attributable to equity holders up 2.6% from 1.77 odd billion TT equivalent to just over 1.81 billion TT dollar equivalent as well. So CIBC generating improved earnings for that fiscal 2024 period, much to the delight of investors. Now, again, when we take a look at that revenue composition, we can see that much of that 4.3% increase in total revenue was in fact attributable to an increase in net interest income, moving from 3.43 billion to just about 3.62 billion TT equivalent, 5.7% increase overall, as well as a 1% odd increase in other operating income from 1.36 billion to just under $1.38 billion TT equivalent. Now, when we look at profit before tax by segment for CIBC, some notable movements at wealth management, for example, down around 14% in terms of profit before tax from 71 million to 61 million TT equivalent. Corporate and investment banking down around 2.4% as well, from 1.66 billion to 1.62 billion in that green column. Of course, this was offset by a 55% odd increase in the personal and business banking segment, increasing from 149 million TT equivalent in fiscal 2023 to 231 million in 2024. So some variability across the segment performances, however, ultimately an overall increase in PBT. So at a price of $8.24, CIBC is trading at a price earnings ratio of fairly attractive 7.1 times and does offer investors a dividend yield of 4.1%, which is below that sector average of 4.7%. However, those dividends are importantly paid in US dollars. So the CIBC represents one such opportunity in which investors can invest in TT dollars and earn a US dollar return. So on the basis of some revenue uncertainty going forward, of course, CIBC would have mentioned that with interest rates in the US coming down, there may be some lowering of their net interest income, and they're hoping to offset this by increasing loan volumes. But with that revenue uncertainty in mind, attractive valuations, as well as those all-important US dollar dividend payments in the current environment, Bourse is maintaining a market weight rating on CIBC for the time being with a stable outlook. Turning very quickly to Scotiabank Trinidad and Tobago Limited, well, the group reported an earnings per share figure of $3.73 for its fiscal 2024 period, of 0.5% increase from the $3.72 reported in the fiscal 2023 period. Driving this performance was a 6.7% increase in net interest income from 1.3 billion to 1.43 billion dollars. Overall total revenues up 3.6% from 1.88 billion to just about 1.95 billion. Non-interest expenses, however, increased 8.1% from 776 million to 839 million. Ultimately, profit after taxes improving that 0.5% from 655 to 658 million TT equivalent over the two most recently concluded fiscal periods. Now, when we look at that modest revenue growth for Scotia, it has been somewhat of a topsy-turvy revenue story over the past few fiscal periods. After recording a negative 0.9% decline in fiscal 2023, back to positive direction of that 3.6%, driven by a 6.7% increase in net interest income from 1.34 to 1.43 billion, as mentioned, offset by a roughly 4.3% decline in terms of other income from 539 to 516 million. Overall, again, that 3.6% increase registered. However, operating efficiency did slip just a bit, and a high operating efficiency percentage is actually probably the wrong direction in terms of that particular ratio. And we can see that over the past couple of fiscal periods, Scotia's efficiency ratio would have increased from 38.9% to 41.3%, and now 43.1% in the most recently concluded fiscal 2024 period, suggesting that there may be some need to manage costs, particularly if revenue, there is going to be some revenue uncertainty, or there may be revenue uncertainty in future fiscal periods. So at a price of $57.01, Scotia's stock is trading at a price earnings ratio of 15.3 times, above the sector average of 10.3 times. However, it offers a quite attractive dividend yield of 5% at the current price, which is slightly above the sector average of 4.7%. So with modest revenue growth in mind in the most recently concluded period, attractive dividends or dividend yield, but also keeping an eye on elevated valuations, Bourse is maintaining a market weight rating on Scotia for the time being, with a stable outlook as well. Well, that's it for this week's edition. For more information, you can give us a call at 226-877-3082 Bourse. Email us at invest@boursefinancial.com. And of course, you can check out all our research, which is absolutely free on our website, bourseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.